Well, welcome everybody. Steven Sitkowski here. This is my Building Wealth podcast. Glad to have you. We seem to be picking up a lot of traction. We're getting a lot of folks that are watching and commenting, and thank you all for that. And in fact, one of the things I'll be doing today is I'm going to go through a lesson that was actually submitted by one of the viewers. So that's kind of cool. And I'll give you an opportunity so that you can participate moving forward. So it is, as of the date of this recording, I know you'll be watching it on different dates. It is the 22nd of June. So I record these every Monday, try to be timely with things. As the viewership picks up, once we get into the millions, I'll probably do them a bit more often. So, for those of you who may not know me, I've been working with people and their money now for about 45 years. During that period of time, I've had an opportunity to train somewhere between 1.5 million and 2 million people. I love to teach. I know the world of finance can be intimidating for some folks. For me, I just love it, but it's what I've done since I've been 19. So it ought to be relatively simple at this point. I want you to know that what we do here is for educational purposes only, should not be considered as investment advice. And even though I may talk about, specific companies or opportunities, I don't know if it's appropriate for you because I don't know anything about your individual circumstances. So, what is moving the markets at present? Well, the U.S. Navy has lifted their block of Iranian ports. So, my understanding, and I get sort of conflicting news on this, and I'm sure some of you follow this as much as I do. Um, Apparently, the Strait of Hormuz has been reopened. Oil prices have definitely come down. We will check in with that today. They're not back down to where they were pre the conflict, but they are markedly lower. And that has a lot of wonderful ramifications. It should bring inflation down just universally. Of course, it's going to make it a little easier on people at the gas pump. Remember, everything gets transported, right? Flown, shipped, trucked. And when oil prices escalate, the cost of those deliverables move higher. Micron Technologies has been going up. They have a major earnings announcement on Wednesday. And I'll tell you why I think that it's major. Their last earnings announcement was fantastic. And right after the announcement, the stock dropped 20 some percent. And I suggested to all of you that I thought it was an opportune entry point that has proven to be accurate. In fact, I'm going to pull up for those of you who can see this. I realize some of you are on audio only, but I'm going to pull up a chart and I'll narrate what I'm seeing. So here's the chart on Micron. So if we go back to March, we can see Micron fell after their earnings announcement from 461 down to 321. And I told anybody who would listen, this is an opportunity. We're now at 1191. And the stock is up 5% today, which is a pretty good indication that they're expecting kind of a blowout earnings report. We'll see. And then, of course, it remains to be seen how the markets will respond. But last time, boy, set the table for people that were in a position to make the investment and that recognize the opportunity. SpaceX share fallen 10% today. It's lower for the third straight day. I made a prediction and I said, I hope I'm wrong, that I thought SpaceX would come out of the gate, right, with all this pent up demand being bought up by a lot of people who don't really understand the economics behind SpaceX. And I thought it would zoom higher. And then I thought it would get more realistic. I thought it would take longer than this. Why don't we pull up a chart on SpaceX? Kind of see what the latest and greatest is. There we go. So it's down, yeah, 10% today. It's down to 165. So it came out at 135, but then the shares were instantly offered at 150, moved up. How high did it get? 225. Now it's down to 165. I just didn't see it as a $2 trillion company based on their current profitability. I certainly understand the upside. And you don't want to bet against Elon Musk. He is definitely a proven commodity. And they're going to do some very intriguing things in the future. But how long are people willing to wait to get the payoff? So we'll take a closer look at SpaceX in a few minutes. 10-year Treasury, a little higher at 4.497. So that next key level is 4.5%, right? We go above 4.5%, the markets get a little grumbly. If we went above 5% on the 10-year, you'd see the market pull back probably 10%. Stock market does not like higher interest rates at all. 4.497 is okay. It's not great. 4 to 4.5, and I know we're in that range, but boy, we're scratching the outer limits. And oil prices are down to 75.35. They were up over $110 per barrel. Before the conflict, they're at $62 a barrel. So we're headed in the right direction unless we get some negative update on the agreement between the US and Iran. And I guess there's some 60 days for that to get finalized. It's kind of the latest thing that I read. And apparently the US has approved the sale of Iranian oil. The Treasury made that approval. So I know we're, in a sense, trying to placate them. We're trying to play nice. The US definitely wants a deal. And I would assume Iran wants a deal as well. So, in most transactions, if two people want the same thing, normally they're able to meet in the middle. So, high hopes on that. Here's your scoreboard. So, if we want to look at year to date changes, the Dow, so that's an index of 30 blue chip stocks, they're up 7.28%. The S&P 500, this is an index of 500 large cap stocks, up 9.57%. The NASDAQ, which is tech heavy, is up 14.09%. S&P mid cap, 14.7. The big winner now is the Russell 2000, up 20%. Now, here's what's interesting about the Russell 2000. So these are small cap stocks. 40% of these companies lose money. In other words, they're running a business that's not profitable, but investors don't seem to care. They're betting on the come, which is a very opportunistic and optimistic perspective. So apparently, investors are feeling better about the future. Market breadth from last week. So, two things that I look at. And by the way, we have the New York Stock Exchange, we have the NASDAQ. So, the two things that I look at, advancers versus decliners, stocks that moved up versus stocks that moved down, and new 52-week highs versus 52-week lows. So, on the New York Stock Exchange, last week, 1,301 stocks were higher, 1,528 were lower. So, not great, but not horrible. 273 stocks hit new highs compared to 127 that hit new lows. That's great. That's 2 to 1. New highs in front of new lows. Definitely bullish. On the NASDAQ, 2,701 stocks were higher, 2,452 were lower. So more winners than losers on the week on the NASDAQ. New highs, 607. New lows, 395. So significantly more new highs than lows. All of that is evidence that we're in a bullish market. Don't forget, we are also in a news-driven market. One negative announcement out of Washington, D.C., and this changes, but we can't speculate on what's going to happen. We play the cards that we are dealt. And the big winners, SanDisk for the week up 11.5%, Corning 11%, Intel 10.64, Supermicro 10.37, followed by KLAC, Micron, MPWR, On Semi, and Teradyne. So those are your big winners for the week. Here's last week's heat map. And boy, you can certainly see some differences between the winners and the losers. So there was a fair amount of red. It was, pretty balanced on the S&P between red and green. Energy stocks were down. Why? Because oil prices came down. Microsoft is still struggling, as is most of software. Microsoft down, Oracle, Palantir, all down. Micron up huge. Qualcomm, Texas Instrument, Intel, AMD all had fantastic weeks. Caterpillar, we recently closed a trade on Caterpillar. I'll show that to you. Up 11%. GE Vernova up nearly 20%. So it was kind of a case of the haves and the have-nots. ExxonMobil down 6%, Chevron down 7%. Healthcare didn't have a good week. Johnson & Johnson down 4.5%, Merck down 4.5%, Pfizer down 4.5%. So markets are definitely on high alert. So single stock implied volatility premium, which is the VIX EQ index minus the VIX, basically tells you what the level of tension is among investors. And you can see if you're looking at this chart, it's the highest it's been by far since 2014. Investors are worried. When you have geopolitical tensions and a market at elevated trading range, that's a recipe for a pullback. And interest rates creeping higher. And today, now we're into the trading day about 3 hours. Let's take a moment to pull up. But, we were down on the NASDAQ about 1%. So that did not look great. The headline is S&P 500 runs out of steam, falls into red as big tech and SpaceX struggle. So, yep, as of this moment, the Dow's up 191. It's doing fine. Those old blue chip, the S&P down 0.31, the Nasdaq down 1.19. AI plus a little bit of energy is really what's driving the market. So this is change in market cap since the beginning of the year. AI way up, right? Energy up. Now, the energy companies are smaller than the big tech. But my point is that everything else has actually subtracted market cap. You pull AI out of the picture, and the S&P 500 is less valuable right now than where it started at the beginning of the year. Chip sales are going absolutely parabolic. They are just rocking. Those of you that can see this screen, so in billions of dollars, we're above 100 billion, significantly above 100 billion, right? Not that long ago, we were under 20 billion. So the chip sector as a percentage of the S&P, so if we go back to January of 02, it was about 5%. Now it is 22%. Question is, how long can it continue to move like this? And it'll be interesting to see because most of these big chip companies have a backlog of orders. So it doesn't look like it's going to slow down anytime soon. Money, as you might imagine, is pouring into tech. For the last 4 weeks, 25 billion has been invested in the tech sector. And why not? It's where all the earnings are, right? Go where the money is. Go where people are profiting. So this is the SpaceX ecosystem. About 55% of the value of this business is from Starlink. What's Starlink? It's an internet provider. But the whole concept here is that there's the chance Starlink could make all these other internet providers obsolete. It doesn't deal with the same kind of issues that land-based internet providers deal with. So when you send these satellites up into space, you get worldwide coverage. There aren't any slow spots. There's not a line that's going to get broken by the gardener and all of a sudden you're out of business. But if 55% of your business is internet and internet subscriptions, and I think they've got like 9 million subscribers, is that worth $2 trillion? 25% are launch services, and I think they still are losing money there. 10% is Starshield, which is, these are government contracts for defense. 5% human spaceflight and NASA. Here's what's interesting. When the average investor who's put money into SpaceX thinks about this company, this is what they think about. Oh, SpaceX is going to do great. It's going to send people into space. We're going to colonize Mars. That's only 5% of the value. That's not what you bought. You bought internet, but the average person isn't aware of that. Not that it's a bad thing. I love the recurring revenue models on anything. But again, or 2 trillion. We'll see. And then 5% Starship and other programs. These are longer term opportunities. So I'm rooting for it. I think space is super exciting. I'm just questioning valuation, and I hope I'm wrong. Earnings forecast. So this is from Goldman Sachs, looking at the S&P 500. So let's look at year over year growth. So in 2025, it was 12%, right? And earnings are the mother's milk of the stock market. All things being equal, stocks should go up in value equal to the increase in earnings. So 12% in 25. In 26, 24%. Gee, I wonder why the market's higher. You grow earnings at 24%, that is almost unheard of. Next year, still forecasted to be 13%, according to Goldman. There are some other analysts that have it higher than that. Um, the current PE is 21. So that's future PE, which is a little elevated, but not bad. Price target for this year from Goldman, 8,000. So where are we now? Around 7,500, I think. 74, 77. Yeah. So they're expecting between now and the end of the year for the market to move up, another 7 or 8%. 12-month return target, 12%. That's Goldman. There are some others that are a bit more aggressive. So we are on track to get double-digit returns for the fourth year in a row. We did it in 23, 24, and 25. So this was something I referenced a little earlier. The Russell 2000 companies with negative earnings per share are moving faster to the upside than companies with positive earnings per share. It seems counterintuitive, even to me. Why would people rather invest in companies that are losing money than making money? And it's because they think some of these newer companies that have yet to turn a profit have more upside. But that is speculation, my friends. So Micron, I talked a little bit about this at the top. It is the story of the week. On Wednesday, they are announcing earnings. And we have various price targets for them. They're being upgraded. Micron got upgraded this week by 6 different analysts. So they're expecting that we're going to have another blowout earnings report coming up. So keep an eye on that. That's going to have a lot of impact on the tech sector, for the coming week or so. So, yeah, Micron was involved in the memory storage, which is required for AI. Those of you that work on computers could talk a whole lot more intelligently about this than I can. I just know I bought the stock in the threes and now it's over 1,000. So when I saw that blowout earnings and then a subsequent pullback, that's when you strike. If you're a shark and you see a wounded bait fish, ring the dinner bell. Inflation expectations are really starting to plummet. That's good news. And where's that coming from? The presumed end of the war in Iran. So hopefully this will prove to be accurate? Time will tell. Market sentiment. So I told you last week that I expected this to bump up for this week, and it did. So this is as of the 17th. They do these once a week. So they do a survey of the American Association of Independent Investors, and they ask them over the next 6 months, what do you think the market's going to do? It's going to be higher, it's going to be lower, or about the same. So the previous week, 30% said higher, 48% said lower. This week, 36.6% higher, 39.4% lower. So still more lower than higher, but by a much narrower margin. So people are feeling a little better, but I can tell you there's still a fair amount of greed, as evidenced by the Fear and Greed Index. So this index runs on a scale of 0 to 100, 0 being extreme fear, 100 being extreme greed. We're at 37. So that's fear. People are being cautious, and I think they ought to be. Now, I believe the market's going to go higher between now and the end of the year, but again, that's predicated on this agreement holding, number one. And no matter what happens, I think we're going to see some significant bumps. You know, there are times you get on a flight, you can take your seatbelt off, relax, enjoy a beverage. There are other times when you're hanging on to the seat in front of you. Not that you're worried that you're going to crash, but you're worried you're going to come out of your seat. I think that's where this market is. The future of interest rates. And I think this is a big driver. Coming into this year, we were expecting 2 rate cuts. Now we're expecting 2 rate increases. It looks like the probability of a rate increase for September is about 70%, a little higher than that. And then we're looking at another rate increase in December. Market doesn't like rate increases. I thought it would handle 125 basis point hike fairly well. Can it handle 2? Will we get 2? I don't think we're going to get 2. Like we're going to get 1 rate hike. I am of the belief that Trump appointed Kevin Warsh, believing that he would do everything he could to lower interest rates. What is that belief based on? Well, when Jerome Powell was in office, Trump was incessantly complaining that Powell didn't cut interest rates. And then he did what Trump does. He tried to smear the guy's reputation and called him names. That's not a political statement. That's just a statement of fact. So based on that, my assumption, and I wasn't there, is that he would pick somebody dovish. I don't know. Actually, in his first presser, he came out a little hawkish. But if your real agenda was to lower interest rates and you didn't want to look like you were kowtowing to the White House, wouldn't you come out a little hawkish and then maybe introduce your real agenda a bit down the road? So the fact that we have these probabilities, I do not consider them to be certainties. It would not surprise me if they didn't raise rates in September and then, maybe did it in October and then left it alone after that. But time will tell. The market likes low interest rates. Sector performance, year to date, the S&P is up 9.87%. The big winner is technology. It's moved way ahead of energy now that energy prices have come back down. Tech's up 22%. We are not halfway through the year. So that's pretty exciting for tech stocks. Energy is still up 18%, but that's an outlier. That was all driven by the war. Industrials up 17%. There's AI construction, ditto with materials, up 12.5%. And now at the bottom, healthcare is actually down 3.5%. Consumer discretionary down 1.87. And I've been banging the drum on financials. When financials was down 5% for the year, I made the comment that I see some value there. Low multiples, decent dividends. Financials has made a bit of a comeback. It's down 1.61%. And I still think there's a lot of value there. News of the week. Let's take a look. What should we be paying attention to? Well, number one, I've already mentioned it. Intel. Tomorrow we've got our purchasing managers index coming out, PMI, for both manufacturing and financial services. So anything above 50 is expansion, below that is contraction. Wednesday, the Federal Reserve Board releases annual bank stress tests. I think that will come in good shape. Thursday is going to be the big day. Okay. So on Thursday, we're going to get our third estimate of GDP. We're going to get weekly jobless claims. That comes out every Thursday. Weekly jobless claims have been creeping up. Personal income will be announced for May, personal spending for May, and the PCE numbers, personal consumption expenditures. This is the primary metrics that the Fed has used for measuring inflation. Rising inflation is what has the Fed now poised to raise interest rates. So pay attention to the core PCE. So that's inflation minus energy and food. And it's expected to come in at 3.4%, which is still pretty hot. Much higher than the Fed's target of 2%. So that's all going to be well worth watching. All right, let's take a look at the charts. For those of you that are just listening, I will describe what I'm looking at. So this is the chart on the S&P 500. So we're down a little bit today. So basically what's happened is ever since the ceasefire was announced back in March, we've seen the S&P grow, formed a rounded top. The 50-day moving average, which is this yellow line, held. It moved higher. Then there was a bit of a pullback, and we've sort of formed a wedge shape. For those of you who can see my screen, I'll draw it for you. So I am connecting high points and low points, and a wedge shape typically is indicative of a breakout. Now, the breakout could be to the upside, it could be to the downside. If it breaks above the upper trend line, market's going higher. Below the lower trend line, market is going lower. On the Qs, which is the NASDAQ 100 Trust, so these are the 100 largest companies, trade on the NASDAQ, very tech heavy. This as well is forming a wedge shape. It's actually closer to its all-time high than the S&P right now. So definitely both of those are bullish. And I also want to look at the VIX, the volatility index, also known as the fear index. And today the VIX is up a little bit, 2.5%. 5%, but that's not much of a move in the VIX. What does that indicate? People aren't really nervous, and we're at 17, which means overall sentiment is fairly calm. So all that is a positive. Moving forward, if you've got questions or topics you'd like for me to cover, shoot me an email at stevesitkowski@gmail.com. stevesitkowski@gmail.com. All right, let me show you some trades that we closed out last week. So my partner and I do trade ideas of the week. So on a daily basis for option traders, we have some ideas that we put out. If you're interested, I'll give you the website where you can check that out. We closed out a trade on Caterpillar. It was a call spread. So basically, we were both buying a call option and selling a call option against Caterpillar. With a June 18th expiration, we closed that trade out in 9 days, made a profit at 22%. So if you think tech being up 22% for the year is good, what about 22% in 9 days? That's pretty awesome. And then on Western Digital, another call spread. This one was pretty phenomenal. We made 48.2% in 10 days. So if you want to get more intel, you know, feel free to go to our site, tradeideasoftheweek.com. All right, so I had a request from one of our listeners. They wanted to know, how can you recognize when a stock is overbought? When has it gotten too pricey? Now, if there was an exact science to this, everybody would get out of the stock at the same time. But there are red flags. So let me give you my list of what I look for personally. Number one, there's an indicator known as a relative strength index. So this runs on a scale of 0 to 100. The two key levels are 70 and 30. Below 30, that stock is considered oversold, meaning it's too cheap. Potential opportunity there. Above 70, it is overbought. So if I were to go, and let me just pull up a couple of random charts. I haven't planned anything in advance. I never do. I want everything I do with you to be organic. Okay. So on the Qs, let me pull that chart up. So you can see up here, back in April through May through June, it's been overbought as this thing moved up. And then notice we had a pullback. So I like to combine. If I see a stock that is overbought and then the MACD turns red, which this one did, chances are good that you're going to see some profit taking. That's exactly what happened. Let me look at another one. Here's Micron. Okay, that's kind of timely. So Micron was overbought April, May, June, but the MACD didn't turn red until June the 4th. And it did take a little dip, but then MACD is now back to green. So we're in good shape there. Let me look at one other one. This is Teradyne. So Teradyne was overbought, but the MACD was still green. It didn't turn red until March, and then you see the pullback. So that combination is pretty effective, right? You have overbought according to the RSI, and then we get the MACD turning, and you put those two things together, and You're going to see a pullback most of the time. Next, I look at the distance that the stock sits from its moving average. So if I see a stock that's moved up and it's a long way away from its moving average, invariably that stock will come down. And that works in both directions. It could be way below or way above. Next, a parabolic move, where you start seeing this thing just screaming higher. Every parabolic move will be followed by a pullback, right? So when you start seeing something go up and it's increasing its strength, at some point you're going to see profit taking. Next, using Bollinger Bands. When a stock gets outside of its upper Bollinger Band, there's a good chance that it's going to want to move back inside. A Bollinger Band, by definition, you have a center line and two price envelopes that are, um, you know, if you look at the statistics on it, it'll be between those two lines 95% of the time. So anytime it goes outside, it's liable to correct. And then the last thing that we look at are valuations. You have PEs that are way out of whack. You have companies that are growing their pricing without a commensurate growth in their earnings. That is never sustainable either. So if you want to look at those trade ideas of the week, you can do that. You go to tradeideasoftheweek.com and they're right there for you. So what an awesome session today. I really enjoyed that. I hope you enjoyed it as well, and I'll be back recording another one for you next week. Until then, be safe, be blessed. Bye.